0300, Sunday, May 3rd. Let's get started. In an attempt to provide accountability regarding tweets from Friday, I would usually send a pretty PDF with charts. My little sister's not around to help me out with that, so for the benefit of time, this is more convenient for me. Let's kick it off with a review of the most disappointing, and from there lead into what may provide good risk-reward setups leading into the week and beyond. Gold, what a disappointment. Bear with me. I want to take it back all the way, long-term chart, monthly chart, 20 years. This is major support. Going down into a daily view. Notice how we're just coming right up into it. Sort of bounced right in beginning of November. All right, so let's focus more on this leg. If we can get above 1244, right? Notice how we had sound resistance over this. This is implying that shorts are still hitting this, and they have profit targets down at 1102s. Whether we get down there remains to be seen, but something to keep in the back of your mind. Originally, where I had put my stop in when I had rebroken buying this level, right? I had seen the participation on there. I had missed it before back at the 1130s. So it's going to be 1140s, whatever it was. Yeah, 1130s. I had missed that. And I've been getting involved pretty much since about here, took it up and sold it. And now getting back into it again over the last months. Been buying this level. I was very interested in it. And from this leg, if you're measuring it, let's get rid of this. So just know it's there, but just for viewing, let's get rid of it. Measuring from the bottom of the, bottom of the March 17th candle until the March 26th candle. This is why I was always interested in buying this level, 1180s. Stops go below the 1171. She was involved. She got brought Thursday. You got taken on Friday. It is what it is. And so, have to respect this. This long is now broken. Regardless if you fingered the chart and measured to this high, you still got taken out. Right? There's no way to cut that. So, being involved in this, you really need to be careful, right? Because this is, again, implying you're going down to low 1100. Right? And you're still within the guidelines of this long-term trend. You'll still be in the guidelines of that. But are you willing to take that ride down to this level? I know I'm not. So, going forward, being that this long is broken and the short is working, I got lost here. Excuse me. Being that this short is working, why bother? Something to keep in the back of your mind, but going forward, until the short breaks, I'm really not interested. Right? Take them as they come, and once they break, that's it. Walk away. Starting off this week, I'm probably just going to be exiting GLD common shares that I have. I have GLD puts that I sold last month that didn't expire to mid-month, and likely running into the risk of getting assigned on those. So I gotta budget manage my risk and say, when does this short break? You got two levels to watch out for, starting Sunday night, Monday morning. If shorts are still defending, it's 1178. You can trade up to pretty much the 1190s, and pretty much what would normally happen, you'll start to see shorts defend this level, and it'll lead down into targets below. And that's how you ultimately get back into the saying that we'll trade all the way down to the 1100. And so it's pretty much level versus level. And just know that nothing is, it's a fight over trend. Right? So you have long term, yeah, gold been again taken to the woodshed, but it's pretty much just coming into support. Right. Whether that support breaks down over at the 900 remains to be seen. But again, I'm not gonna bag hold it all the way down into this level. Right. It's waiting for the shorts to break and buy pullbacks from there. Pretty much, I'll watch these two levels coming into this week: the 1178s and then the 1196s. If those two level breaks, then I'll buy pullbacks. But damaged, just walk away. S&P 500 using the E-minis. What a chop fest. All right, let me get rid of all of these. That was all drawings. There you go. Okay. All right, I'm not going to go too far back into it. We're going to just price action over maybe the last 2 weeks from this April 17th anchor, low to highs, new all-time highs. Okay. Major support being 2085 halves. Right. That was taken out Thursday. Originally, for Friday, I was using all-time highs to Thursday's lows, which pretty much came almost at the end of the day. And initially, I was taking entry off of these 2095s, stop at 21, maybe drawing a little off, so these measurements are not sure. Let's see what's going on here. Yeah, I guess I had a 2101s, and pretty much that was valid. I had walked away from the screens early, and I usually have my sister managing my book if I'm not at it. And she had told me pretty much that she's going to adjust my stop, only because you have to understand that since January, the indexes, the equity indexes, whatever it is, they've been trading pretty much in a choppy range at profit targets, long-term profit targets. And it's been a hard long, only because you really can't trust them. And it's been a tough short. And I do not know at all the reason behind it. I can have an opinion only because it's a lot of people are heavily invested into U.S. equities. So you're going to get these wide ranges. And I like to call it distribution. It's not going to go from point A all the way down to point B in a snap of a finger, right? People, institutions are trying to put on protection, right? Whether they're just entirely net short, I don't know, and I'm not here to argue with nobody. However, you're going to get a lot more of this. But when this trend starts to go one way, you better respect it, because this boat will move fast. And whether it's up or down, I have no idea. Right? It's a day-by-day basis until major support gets taken out. This market really has to prove itself and really start going well above these levels. It's the old adage of you have to go down in order to go back up. That applies. And again, we're sitting at long-term profit targets and pretty much just going away. Back into this leg, I was told to pretty much to adjust my stop to where Fridays, usually Fridays, you have to pretty much know the days to trade or to initiate positions, whether it's long side shorts or whatever it may be. And Friday is comes known as pretty much an option expiration date or a low volume day, to where a lot of people are just not involved on Fridays. Mondays, you rarely miss anything on a Monday, only because people who are trading Monday are very emotional. They're revenge trading to make up what they lost last week, whatever the case may be. So you have to know, not to say that you cannot trade those days, but don't position yourself with your opinions on those days, and just take setups as they come on those days pretty much. So pretty much on Thursday, when we had broken the 85 hats, and pretty much I said we had broke 95s, we broke 85s, we pretty much, the initial reaction was we bounced only to get sold, and the rest of the day we just pretty much single printed down. And not to say to disregard the day, but you have to understand, a lot of people want their fill. So what was told to me, what should have been the appropriate action, was to draw from all-time highs, and the same anchor to low that broke trend. It's just funny that I found that pretty much for the remainder of the day, we went right to profit targets. Usually once you break, you would rally up into the halfway back and then come back into profit target. We just pretty much went up and it's pretty much flattened line. And so that's what made me, I would not redraw a fib until we went to profit target. And that's why I was using the 95s and the 01s. Being that it was Friday, I should have just used the immediate first anchor that took out support. So coming into this week, Sunday night, Monday morning, I'm going to still be using this first anchor. I apologize for not putting it out on Twitter, but I just wanted to walk away from the computers. I usually have the long days. I wake up early. I start looking at what's going on, what's holding these lines, and I make my moves from there. Pretty much I'm still in this trade. My new stop is the 06 quarters. That's my line in the sand. If we're still holding below these levels, I really don't expect too much until really Tuesday. And let's see what kind of movement we get from there. But what I see happening pretty much coming into this week is that we're probably just going to be chopping around these levels until Tuesday, between the 06s and the 85s. From there, we should get some direction. If we find that we're trading above or below, I would really respect it. regardless of what day it is. And you have profit targets up at the 32s, and profit targets down at the 74s, and down into the 58s. So let those be pretty much, some people call it a box trade or whatever it is, pretty much range, and pretty much the same thing. I would really, let's move this out the way. Respect these two pivots. And let's just see what happens from there. I'm not going to give any long-term profit targets or what's called, because it's just pretty much noise. Until we break this range, nothing will happen. And again, another disappointing chart to look at. Just go from there. Right now I'm still holding an entry. I had originally shorted 10s. I took profit, reshorted, took profit, and I had reshorted the 95s, and that new entry is underwater. It is what it is. It's a full stop out on everything above the 6 quarters, 2106 quarters, full stop out. I don't want to switch it up above from what I was going to do, but looking at TF Russell 2000, he was involved from, I'm going to be taking entry back at the 50, originally I had taken entry here at the 72s. Excuse me, that was this week. It wasn't that far back. I took entry at the 72s, taking profit at the 45s, entries back at the 54s, and I think I got out I had gotten out a little in the 20s and somewhere in the 17 or 15, somewhere around there. I forgot exactly where. And then pretty much I'm still holding the same size. I'm not going to adjust that. This one has been working out. If you had gotten in this trade, you had booked single contract well over 500 ticks on this. This has been a phenomenal trade. Besides that, nothing really to say. If you're involved in the Russell, if the ES is coming up into its support or resistance, I would expect this to trade up into the 44s. Bearish above, bearish below, bullish above the 1252s. I would really respect that. Let's get back into schedule. Next chart, dollar futures. This has been a phenomenal, slow, and let's just say a harmony trader chart, especially from last June. The breakout from the 80s. Just want to go into a monthly view of it, to where this is a very scary chart. Keeping in mind back of what gold is coming into support. The dollar is coming into resistance. And I have to give credit to David Halsey at emaniatic.com for bringing this to light, because although I got involved on the breakout of 2014, idiot me is not paying attention to what the long-term chart is telling you. And if the dollar can't clear the 102.13s, this is implying we're going down to the 59s, 59.27s. Huge. Going forward, let's look at least a daily. All right, pretty much you're sitting at I would say a no trade zone right now. You really can't buy it. But then at the same time, you really just can't take a blind short without risking, digging back into this main resistance. I mean, you measure your risk. As we're sitting at 95, and you can come all the way up to where your stop should be, all the way at the 102s. So risking 700 plus ticks, 1,400 plus ticks. So your choice, but I would wait to see if possible we can get up and back into these 97s, so you have a tighter risk band to where you're risking pretty much 120 ticks roughly to get down into these 93s, and pretty much from there you just keep trading a level, or at minimum adjusting a stop. So going forward, I would say it's just a wait right now, see what happens. As hopefully this is pretty much why gold is falling down into its support again, and probably this is going to come back into its resistance, and then we'll just go from there in the coming days. I was telling you something's happening. This whole run up over the last year, it's pretty much a fade trade going on. That's all that's really happening. This is going to be huge. I mean, look at the reward. Talking about risking X to make 10 times X. Scary chart. Let's go into the euro. Opportunity, baby. This was a wild ride last year. Wow. Right, let's go into pretty much what broke. A short extension. When that had broke, this was its last short resort. And this broke on the 29th of April. This sell-off is over. This euro, you better be looking for buys. This, don't know where it's going. I mean, there is other resistance levels, yes. And obviously, the first resistance level I will go to would be the, for accuracy, let me bring that up. The May 8th candle, high of, down into the 104.7s. Let's just get just about. This is going to be its likely target, the first target at minimum. I mean, we'll take level versus level to get up to there. We're not just going to hope for it, but looking for entries into it. And no, I'm not holding along. I've been taking scalps that's not worth mentioning, but when it's time to get into it, we will find it. Two possible entries. This high, April 17th candle, until this high, Friday's candle. This will be an aggressive entry. Right? This is pretty much the same. You can measure crude oil like this. Same. I'm not sure if they're the same dates, but just think about this as looking just like crude oil. All right, so this will be an aggressive entry. The 110.78, stop below the 110.260s. That's an aggressive entry. If that fails, you know where you're wrong. Look for the halfway back. Just look for the halfway back. And it'll be the 109.12. And then that long is wrong below 108, but let's just say if I had an opinion, I really doubt it. All right. However, you gotta take what the chart is telling you. This is your risk reward parameters. Again, I would look for the extension first, because I believe a lot of people are looking to buy pullbacks on this. I would look for the extension first to trade, and that will lead into the 114s. If that doesn't work, if this fails, do that all the way halfway back from April 14th lows, April 13th lows to the highs. So you got some risk setups there. Reason why I stress the currencies a lot versus the equities, you get a better range, straight up. Tick per US dollar, you're getting a range that's at least 3 times better than what the equities are doing day by day analysis. All right. That's all I got for you guys. Going into the week, what changes, I'll update you, but pretty much I'll be muted. Have a lot of other things to do. And got my little sister. She's running the book, and unless anything changes, I'll probably be pretty quiet. Guys, have a good and productive, safe week. Peace.